Welcome traders to this educational video of Nifty Analysis, episode number 26. Currently we are looking at the monthly time frame of Nifty Spot, and what we can see is that we had a terrible correction in this particular month, and the RSI has almost gone near the level of 30. It's not below 30 as of now, it's just above 30. Although this month is not yet complete. Today is 25th and we have a few days to for this month to get over. The second positive thing which I can see in the monthly time frame is that currently the markets are trading at a trend line support which is holding on since almost 10 to 11 years now. So this is a very old trend line and this looks like a very strong support. All right. Now let us go to the weekly time frame. In the weekly time frame, what I can see is that last two candles have been a very big hammer. Although the current correction which is going on in the market is a very different type. What is happening is market falls. Suddenly there is a 1 or 2 day pullback and suddenly then we have a gap down and again market keeps going down. So due to these patterns emerging, we have two hammer candles which have been formed exactly at this trend line support which I showed you in the monthly time frame. And this particular candle is yet not complete because today is not a Friday. Weekend is yet to come, and by that point of time we will not know what sort of candle will be formed over here. But as of now we can see some sort of buying is emerging from the lower levels, and even the RSI is well below the 30 levels. Currently the weekly RSI is somewhere around 17.57 or almost at the 17 level, which clearly shows that the market even in the weekly time frame seems to be extremely overstretched. There is one more support which is coming from the Fibonacci extension, which you can see this is the 261.8% Fibonacci extension on the downside, and once again market is not able to close below this particular support for very long. All right, so this is a positive thing for the market in the weekly time frame. Now let us go to the daily time frame. All right, in the daily time frame what I can see is that we have multiple positive divergences in the RSI, and whenever we have multiple positive divergences in the RSI, it does not mean first of all that we are bottoming out. First meaning of this particular formation on charts is that the momentum of the market to go down is slowing down. The power of the market to go down is getting lesser day by day, number one. Number two, that some sort of pullback or some sort of relief rally is probable. I'm not saying that there will be a relief rally, because what is happening on this particular candle, if you see, there was a massive pullback and suddenly there was a gap down the next day, and then 3 days we saw a sell-off. Again over here, what we could see over here, there was a high wave candle. High wave candles normally mean that the market is extremely overstretched on the downside, and then we had a very big green candle, and suddenly the next day also we had a gap down. So the type of the correction which I mentioned in the starting of the video is very different in comparison to all other corrections. What is happening, some sort of positivity emerges on the shorter term time frame, and suddenly the next day or day before next day possibly the market gaps down and market keeps going down, and due to these patterns we have positive divergences emerging on the charts. And along with this positive divergence, we also have a bottom failure swing in RSI, which is a clear-cut sign that the market is trying to bottom out. I'm not clearly saying that the market has bottomed out, but this is a sign that market is trying very strongly that it wants to bottom out and it wants to go slightly higher for some sort of pullback. Now, if you see carefully, in any sort of top out pattern or any sort of bottom out pattern in the market, we need very good candle patterns. But over here, what has happened is we don't have very good candle patterns. But if you open up the chart of Bank Nifty, we have a hammer, and after a hammer, we have seen bullish belt hold. So the candlestick patterns emerging on Bank Nifty charts are very good, which is also a positive sign for Nifty, because in last few days when there was some sort of pullback emerging in the markets, especially on these 2 days, I was clearly seeing that all other sectors were trying to participate, but Bank Nifty was not showing any sort of strength. But today was a different sort of day. Even yesterday, Bank Nifty showed a little bit of strength. Even today, if this continues, if the strength from Bank Nifty continues, it will be helpful for the Nifty also. Now, let us see what if this pullback continues. What are the levels which could be tested? I don't expect as of now this pullback to be very large, although we could expect somewhere around, you can say, 8600 levels, maybe somewhere around 9000 levels, and maybe somewhere around 9300 levels. All these levels could be achieved. Max maybe on a higher side, you could say around somewhere around 9600 levels. All these levels could be tested, but we need to understand the volatility is very, very high. Just before one day, I think VIX made an all-time high, and when volatility as is at such a high level where markets, forget about stocks, but market itself, the index itself is moving 5% to 6%, maybe 8% in a day. This is not a time to act brave. This is not a time to venture out for adventures. This is a time to be patient. Understand the volatility is very, very high. Even if you think of trading in this sort of market, I would always advise not to trade. But if someone wants to take a risk, be very cautious. See that you deploy only 25 to 30% of your entire position sizing, which you normally do in average normal markets. Because what will happen over here is the reason due to which the markets are coming down is not an internal reason. What I mean to say is coronavirus pandemic is an external reason for the market to correct. So in case overnight, if there is some sort of negative news, a burst of cases, I hope that doesn't happen in India or in any other country. Overnight, a lot of positive cases come up in India or some other country, and suddenly the market starts falling, then we'll again see volatility rising. But we need to understand that we will need to take some sort of decision as as a trader, that whether this market will go up or it will come down. So this particular point I would mark, say around 74.90. If market closes below this, say around below this by 1.5%, then this entire view that the market could pull back a little bit could be cancelled, and then we'll have a sell-off which will be going on. And if that does not happen, if market sustains, then I've already shared all the levels of the pullback in this particular video. Be very careful. Do not venture out for huge aggressive trades. Be very patient and let the volatility cool down first. You have seen that the volatility has gone up till 85, 86 levels in the India VIX. Let the volatility cool off first, then you start looking for trades. All right. So trade safely, trade wisely, stay indoors and be safe. Thank you.